I'm going to take away all the excitement and trade the setups if they occur. And if they don't occur, I simply walk away. I have to wait 85% of the time until prices reach a certain destination that I'm looking for. In order to make this work, do you journal? Do you have a trading plan? Do you trade according to your plan? Out of 10 traders, 8 will say, no, I don't have the things you're asking me for. For me, it's like folding a hand. It's one trade of the next 1 million to come. Monday and Tuesday combined form the high or the low of the week in 80% of the time.
Welcome back to another episode of the Trading Battle weekly interview series where we dive deeply into the minds of top traders around the world. Today, I'm joined by Constantin Pabst, a full-time trader, a mentor, and co-founder of peaktraders.com. Constantin's been in the game since 2002. He went full-time trading in 2013, and today runs one of the most structured, process-driven trading operations out there. His style is calm, his execution is precise, and his results are consistent. Constantin?
Hi, Jason. Thanks for having me here. I'm really excited about our podcast today.
Well, I'm excited to learn about what you're doing. We'll get on to peaktraders.com in a minute. I just want to hear about basically what got you interested in trading and how did you start and what made you decide to go full time?
Sure, of course. So one of the reasons I started trading is that my father was a trader as well. Well, not full time, but part time. And I was always interested in the market, always had like kind of feeling for the market itself. So I started to look into it years ago, like you already mentioned. And then I started trading on the side of my normal job that I had at this time. And it got better and better. And I got more interested and more interested. And then at one point I decided to go full time, as you mentioned, because this is everything I want to do. And that's basically the reason for it.
Okay, so sensible approach, didn't go straight into it. Were you already becoming consistently profitable by the time you went full time? Did you have the confidence to know that, yeah, I can do this?
So by the time I went full time in 2013, I was profitable, right? But it took me about 5 to 6 years to become profitable. I think at that time, it was really hard to get all the knowledge. So nowadays, I think it is way easier, right? Because you have all those YouTube channels, you have free internet forums, stuff like that. You have good mentorships, partially, but you have them. So it's way easier. But it took me, I think, 6 years to become profitable, right? And 7 to 8 to make some good money in the market.
Okay. Now, that's really interesting because a lot of people think, okay, I'm going to start trading and within 6 to 9 months, I'm going to be doing well. How hard can it be? So I think that's a really important message.
It is.
People wait after 2 or 3 years.
So the issue with trading itself is, so it's a wicked learning environment, meaning every effort you put in the market will be given to you later. So comparing it to playing an instrument or doing a sport, right? You get constant feedback, which is not the case in terms of trading. So one thing is you can do everything right and your trade will fail, which demotivates people, right? So this is one reason why people system hop, look for new things, look for the new shiny objects, stuff like that, blah, blah, blah. And so the market is kind of a cruel teacher, right? Like I said, you can do everything right, but get a worse outcome. You get punished because you have a failed trade. People don't look on a big sample size. They just evaluate 30, 40 or 50 trades in the market. And if this doesn't work, they switch to a new system, stuff like that. So you have to be constant in your approach and stick to your system. So in the end, trading is a business like every other business. And as you might know, or as you know, it takes 3, 4, 5 years to build up a good restaurant or to any kind of business. It simply takes time.
Absolutely. They're really important actually for people to understand that. And most people don't. Okay, so your trading style, and I like this, and I know why you call it boring and methodical, but I think it's important for you to explain, what that actually means.
Okay, of course. Yeah, so boring and methodical means you have a structured process. That means I personally know what I'm looking for in the market at any given hour I'm sitting in front of the screen. I want to see reoccurring patterns in the market that repeat over and over again, right? So I have A setups, B setups, C setups that I want to see in the market, meaning I'm going to take away all the excitement and trade the setups if they occur. And if they don't occur, I simply walk away, or I wait until the setup occurs. And there is no rush for me to take any trades or stuff like that. I simply have to wait until price is going to a certain level, right? So I'm trading intraday on a 5-minute, 3-minute, and maybe sometimes 1-minute time frame, but I have to wait until price is going into a certain location, which means I have to wait, I would say, 85% of the time until price is reaching a certain destination that I'm looking for. And this is actually one of my edges in my trading system. So there are two components of a system, at least for me. So first of all, you have to find a system that suits you, right? That you can work with, that you resonate with. And then you have to be able to execute the system that you worked out. Because there is, as you might know, there are good analysts and there are good traders. Both combined is actually pretty hard to find in the market. Because when you see price reaching a certain destination, you have to have the confidence to execute on your trade. So, and when you have done this over and over again for, let's say, a sample size of 500 trades, you will have so much confidence in executing, although this trade might fail, but you don't care about it because you believe in your stats and you backed up data. That it's kind of boring. In the end, it's kind of boring.
Okay, I love that, and I completely agree with you. I can see that you've really come a long way in your trading journey. It's absolutely true. You through doing that, you've removed the emotion completely. You're acting like a robot. You have your strategy, and when the setup comes, you know that you have to execute it because it's your job. You're a trader, and it fits your strategy. You can't hesitate, because also that will then throw your data out if you don't take the trade, your sample size. And I love also the fact that you say that you 85% of the time you're waiting. I'm a believer in that. Is it called the Pareto principle? You know, where you make 80% of your profits from 20% of your trades, or you only trade 20% of the time, and 80% of the time you're waiting for the opportunity. I really think that those are important points.
Absolutely. So the main problem, I think, with new traders is to understand that it is important to build up a certain sample size. So first of all, you need to have a trading system, right? Then you need to be able to execute on it. Then you need to understand that trading is this wicked environment where you get delayed feedback on the things you do, right? And you also need to understand that everything you do has always like a 50% of working out, right? So you can be trading not according to your rules, which is one of the biggest problems in trading for new traders. So you take a trade that is not according to your rules, and then it works out, and then you adapt the wrong behavior of this trading style, which will work for a certain period of time, but then somehow you get the backlash out of it, right? So there's a little uphill you have to overcome in your trading to make it work. And I think this is nowadays one of the most the biggest problem in trading education, everything you do around it, right? Also because the entry barriers to trading are so low, blah, 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 stuff like that. And you have to also, when you trade it a lot and you have a sample size, you have to evaluate your statistics and have to work with them.
So true. So true. And the flip side of the doing something wrong and having it work, which throws out your system, is when you get to the stage that you're at now, you can actually find satisfaction when a trade goes wrong, because you can think, doesn't matter. I stuck to my strategy. I know that a certain percentage of my trades won't work. That's to be expected, but I've got my stop loss. I lost exactly what I knew I could lose. And mentally, you're right, doesn't matter. And you're ready for the next opportunity without any hesitation whatsoever. the loss doesn't impact you.
No, it doesn't impact me at all. I compare it to playing cards. Let's put it this way in relationship to poker, because for me, it's like folding a hand. It's one trade of the next 1 million to come, right? If I see it doesn't work out, I simply fold my hands, put my cards away, and wait for the next opportunity, right? So when I streamed my trades, I don't know, the last two was 2 weeks ago. So I made one fair trade on stream, right? I didn't care. People also know that I don't care, so it's not an issue. Sometimes people think when you post something on social media, it's like a big deal, blah, blah, blah. And then 10 minutes later, I got the better opportunity, the better entry price, and I made up for the loss, and I made an exceptional large gain, right? And people have to understand it. So also another important point is that the trading is process driven and not money driven. People go into trading for the money, which is obviously a nice, or is the byproduct of everything, right? But the thing to start with is the process, which has to be structured as well. And
It's so true. And I think that's actually a concept that it sounds so simple when you say it, but I think people really struggle to understand it. I'll be honest with you, I struggled to understand it when I first started. I was like, but the money is the measurement of the success. So how is it not important? But you are right. It is about the process, and the money will follow. Okay, so moving on from that, now, just before we started the interview, you talked about parts analysis, and I don't really know what that means. Can you explain that to me?
yes, sure. So I'm going to talk about the parts analysis. So you are a human being, and within you are certain parts of yourself, right? So for taking me as an example, I'm a father, I'm a husband, I'm a trader, I can be a perfectionist. So there are different parts, and maybe I'm also want to go out, have partying, blah, 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 blah. And all those kind of parts have to align with each other in order to take a trade. Meaning, for example, me as a father, so on Thursday, I'm getting off early out of my office, right? So I'm getting off at 2 p.m. European time, but the New York session is opening at 3:30 European time. Meaning, if I'm at home and my children want to play with me, but I want to trade at the same time, there is a certain conflict. And this conflict will cause some problems maybe in my trading, right? Because I'm sitting in front of the screen, my children are asking me to do something with them, so I'm in conflict.
You're distracted.
It's the same with my wife wants to do something with me, or there's a certain dinner. So every single part within myself has to be aligned to trading. Everything has to be right. If I'm in a conflict with my spouse, with my wife, at this time, I can't trade. If I'm going to be too perfectionist about my trading, it will be maybe a problem, right? So all those single parts within me have to align to make it work. And there also can be the thing where I'm having the feeling I want to reward myself, so I want to go out on a certain night, right? But I know when I go out and I drink something, or I go to bed late, right? There will be some problems trading the next day. So those two parts of going out and being a trader have to align in order to make trading work. For example, I feel the urge to go out to dinner with my wife and my friends and her friends. I know we might drink a glass of wine, one or two, whatever it is. And then I know, okay, the next day, this will maybe affect my trading. So what's the resolution for that? The resolution is going out to dinner on a Thursday night, as an example, only drink water, be fit the next day, maybe don't trade the European session, but trade the US session. So this partying part, or the part of me that wants to go out, is satisfied in quotation marks. So I have the urge to go out, experience some things, other people, whatever you want to call it. And then I'm also be able to trade. So this is really important, right? It's the same like coming back to the children aspect. My children want to do something with me, and I have to take them to soccer, be totally fine with it, right? Be totally calm, be satisfied. They are satisfied. My whole system is in line, and then I'm able to trade. So this is like the different parts of your whole ecosystem that has to work in order to take trades. Comparing it to you want to trade, you are having an argument with your wife, you have to take the kids to soccer, maybe you lack some financials, which shouldn't be the case in trading anyway. You have to pay some bills, whatever it is. You can't trade. It doesn't work that way, right? Because as we talked about, it's an feedback endeavor, right? Where you get constant feedback, and all those things are going to influence you, and you have to put them, well, at a certain level. Let's put it this way.
Yeah, and what you're saying is trading isn't like a normal job where you can go to work and have a hangover and still function and still do meetings. You won't feel great about it, but you can get through the day. Trading, you can't do that. You have to have 100%, mental clarity and focus, or you will screw up. Because even when we have mental clarity and focus, we can still screw up. Unfortunately, we're not robots. So you have to put yourself in the optimum state of mind. I call that mental capital. I say to people, you need monetary capital to trade, but you also need to have your mental capital. You need to have that complete focus and calmness and state of mind to be able to operate. Otherwise, yeah, you're right. Either drink water the night before or simply don't trade. The thing about day trading is it doesn't mean you have to trade all day, and you don't have to trade every day. And that's actually the luxury of what we do.
So this is also one of my slogans. Day trading is not everyday trading, right? I'm also not a fan of suppressing. So some people tell you have to suppress your emotions. I take them as a certain, signal, right? So for me, when an emotion comes up, I simply log out of my trading account. Some prop firms have a lockout function, right? So when I get too excited or I feel, when was it? I think last week, where Trump was talking about tariffs and my kids were still up and I had the urge to trade. Although I'm trading for many, many years, I simply logged out of my trading platform in order to avoid trading, because nothing good comes out of it. It simply doesn't work.
But that's actually a really important point, because when I did the same thing, when the Trump thing kicked off, the reaction for me was unexpected. And on Thursday and Friday, I have a subscriber group, so I may not want to trade, but I'm obligated to provide signals and analysis. And I actually said, right, I'm going to provide the analysis because that's what you pay me for, but I'm not trading today, and I don't think you should, because I don't understand what's going on. And I've been in this 38 years. If I don't understand, I'm pretty sure you don't either. Now, some guys decided to trade, and they came back to me Friday afternoon and went, oh man, I wish I'd listened to you. And the really professional traders just did. I don't believe that professional traders traded on Thursday and Friday. Now, over the weekend, I managed to get a grip of it. And on Monday, I could actually find some opportunities. But what you said is important. You got to know when not to trade. It's almost as important as knowing when to trade.
Yeah, of course. Yeah, absolutely true.
This brings me on to another point, which I would like to ask you about. You talk about mental trading account. I guess that's related to what we've just talked about.
Okay, sure. So this is something I do with my mentees. I teach on a one-on-one basis, the group mentoring, and also in the Discord, right? So a mental trading account is not invented by me. I learned it from Van Tharp, and the original guy who invented it was Mark Boucher, who was also a mentee from Van Tharp. But the bottom line is the following. So you have an expected money you want to make within a month, right? I know you can't set profit targets because the market is going to give you what it's going to give you, but you have a rough estimation of what is going to happen, right? And there's certain things you need to do in order to get to this goal, okay? Let's say, for example, we have a profit target of 400 USD or 400 euro a day, okay? In order to achieve this, you have to do certain steps in terms of self-analysis and trading analysis, and also a balanced lifestyle to achieve this kind of target, right? So we have 400 USD in the back end that we want to achieve. So we assign a certain dollar amount to every task we have to do. So it's top 10 tasks of trading, right? So we want to do a daily self-analysis. We want to do a time journal of our day. We want to meditate. Obviously, you can exchange those kind of things, right? We want to exercise. We want to prepare our market sheets. We want to do a mental rehearsal of the day, right? We want to see if we are able to stay in state. We want to do a debriefing. We want to back up the data, and we want to be prepared for tomorrow's trading. Everything that is in this list is essential to become profitable, right? Sometimes you can't force an outcome, but you need to do those kind of things in order to make the trading work, okay? So if you do those kind of things, you will have a number of, like we discussed, 400 USD. You do it on a daily basis, right? So every day on your mentor trading account, you should have a profit of $400, right? So, but when you, at the end of the month, and you have not been profitable, and you check your mentor trading account and you see at a couple of days you haven't done your daily self-analysis, which will give you $0, not 20, for example, and you haven't exercised and you haven't prepared, so those are zero numbers, right? So instead of 500 USD total balance, you only achieve 200 USD, okay? You see that this whole picture is not complete. So you shouldn't be surprised that your trading didn't work out.
So that's a concept I've never seen before. That's interesting. You've taught me something. I mean, you are breaking processes down to the very, to minutes of the day almost. You're really focused on the whole process.
It is. So this is a framework that interconnects with each other, right? So you have to do every single step of a mentor trading account. So I prefer to do this, especially with new traders or also experienced traders who lack process, right? Because most of the time when someone comes to me, asks for one-on-one mentoring or group mentoring, or even the Discord, it's a little bit difficult to do this in Discord, right? Because the spectrum is a little bit larger. But if a trader comes to me and says, okay, I'm lagging profitability, I'm having problems in making this trading thing work, the first thing I usually gonna do, or one of the first thing is, okay, this is your mentor trading account. Those are the top 10 tasks of things you have to do. I mean, it's not hard, right? In order to make this work, do you journal? Do you have a trading plan? Do you trade according to your plan? And then you see out of 10 traders, 8 will say, no, it's not, I don't have the things you're asking me for, which are pretty basic things. So the mentor trading account is basically giving you feedback on the behavior you did within a month. And if you see, okay, I'm lagging journaling, I'm lagging to have a balanced lifestyle, I'm lagging to prepare for the next trading day, well, then there's no wonder that this doesn't work.
So you're really focused on structuring, on being the complete trader from the minute you wake up.
Yeah, of course.
Yeah, this is not just about your job. This is who you are. This is your whole lifestyle, your whole being. Everything that you do throughout the day is completely focused around being that complete trader in the right state of mind, not just the process of trade execution and trade management and account management. It's actually taking on the whole persona. So, okay, that's really interesting. So we've talked about processes now. I imagine that your day, judging by what you're telling me now, there's a huge structure to your day. I'd imagine your days are exactly the same every day in order to make sure that you have this mental preparedness. So talk me through the structure of your day.
Okay, so this is a basic workflow chart, right? So for my process, for my intraday trading, obviously it can be subjective of the trading
Didn't
style you
expect to
take.
see this. This is amazing. You really do have a structure.
I do. I need to have it. I mean, it is simple stuff that people ignore to do because, like we said in the beginning, there's always the possibility of a 50-50 outcome. But it's a coin flip. There are many people that made a lot of money without having a structure, and they are clever if they walk away at a certain point, but they don't. right? So they lose all the money in the end. But there needs to be a certain structure. So before every session, so I'm a day trader, like I said, I want to know what kind of day was the day prior, right? Was it a high volatility day? Was it a low volatility day? Was it an inside day? Did we have a range expansion day? Is it a ranging day? Okay. Can I create any bias from the higher time frame? So I'm trading, like I said, the 1 to 5 minute. 50-minute is giving me the bias, but is there anything on a 4-hour on a daily time frame that I can work with? Okay, so I'm going to mark out certain levels. Then coming back to, if I have done this, which is pretty easy, how are my parts looking? How is this analysis looking? Because although I've done all of my chart markups, am I actually in a zero state and be able to trade? Right? So while I make up my chart, but I'm having a fight with my wife, there will be some complications in the long end. Okay. And if this is checked up, I'm ready to trade. Okay. So this is the first compartment. Second compartment is I'm looking for my points of interest within the sessions, right? So those are my sessions I marked out for. And I'm a firm believer of having fixed levels on my chart that are non-negotiable, meaning when you have some guys that are pointing out this level and this level and this level, which is highly subjective, because when I'm showing you this approach and I'm saying, hey, Jason, this is the level I'm looking for, you might say, okay, this is not the level I'm looking for because I'm looking at some level that is 20 ticks higher, for example. But having something like a previous day high low, previous week high low, is a session high low, blah, 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 is fixed. It's non-negotiable. So I'm looking for my entry points around those levels.
Mm-hmm,
yeah.
Mm-hmm. Okay.
Because you can't argue with this. You're telling me this swing high is important. I'm telling you this swing high is important. It's complicated. Let's put it this way. Okay. And I'm doing the same for the US session. Okay. And then I want to know if I have a signal day. So I'm trading differently regarding the days that show up in the market. So when we have a signal day, I know exactly what I'm looking for in terms of price action. When we have a first red day or first green day, which is basically a change of structure. So you have a sequence of down days, you have a first green day. I know what to look for. So that's a signal day, right? Or do we have a trading range and trading totally different when we have a trading range compared to a trend market, obviously, right? And then I have obviously entry models that are defined, that have a name. I'm a huge believer that every setup or everything you trade needs to have some sort of name, right? Because if your trading setup doesn't have a name, how can you sum it up? How can you describe it? How can you describe it that doesn't have a name? It's really complicated, which also means it doesn't have structure in the end because it is flexible and turning things around. So the trading setups you take, the trading environment, the entry models, well, they need to be defined and have a name. Let's put it this way.
Is that a way of saying to yourself, if you put a label on it, you can say, this is, whatever. I mean, it's like people, like we have labels for patterns like Head and Shoulders. And I mean, a Head and Shoulders is a nice label and it sounds really interesting. And all it is, we were in a bull trend and now we're starting to see lower highs and lower lows. That's all it is. But you give it a label and suddenly it's more easy to recognize. Is that what you're doing?
Exactly. Yeah, exactly. You need to be coming back to, you need to know exactly what you're looking for. This is one of the main components, right? Trade one setup, become a one-trick pony, do it over and over again, and then expand. Or you don't expand, right? Then you also need to understand the trend structure within. So there is you need to be aware of the time frame alignment, right? So everyone has a different definition in terms of trend, right? So especially when you are nowadays on social media, the trend is long, the trend is short, the trend is this and that. But what are you looking for? What is your defined trend? you, Jason, can be right in going long, but I can be totally right in saying, okay, I'm going short at this point, which might be a long point for you. You just have to understand it. And you also have to understand that maybe, so I personally like to counter trend, especially, so when the 1 hour is bullish, let's say, for example, I like to take shorts on a 1 minute. Okay. I like it. Whatever it is profitable. But I need to understand, for example, that set up against the higher time frame, trying to have a lower probability of succeeding, well, in the first place, right? Because it's a counter trend trade. You're trading basically the pullback leg within the higher time frame trend. And it's a short-term scalp towards an entry point for your entry. So if you are saying, okay, I'm long biased, but I take the short, I'm basically trading towards your long entry point. Do you know what I mean?
I do, yeah. You're trying to catch every wave in effect. Is that what you're saying?
Yeah, I like to play ping pong a lot.
Okay. Well, that's an interesting approach because that goes against what I do. So I'm glad we disagree on one thing. Makes for a more interesting conversation. You know, if I just agree with everything you say, it's going to be boring. And it's interesting because I don't think I've ever seen such a disciplined approach. I mean, it looks to me like what you're doing is completely eliminating any element of luck in your trading at all.
Yeah, most of the time.
And there is always luck involved, of course, but you're really trying to minimize that effect.
I'm a discretionary trader, right? So I do I also have a lot of gut feel and experience in the market, which is hard to teach. Okay. So I found out that the live trading sessions that I do in the Discord or with my mentees are actually the most valuable ones, where I walk them through step by step on the price action. And they also see that from time to time, it takes a lot of time for a trade to evolve, right? To go to a certain entry point. So this is the NQ chart, okay? So this is the European session. This is the New York session.
That was a hell of a day.
The morning session. Yeah, exactly. So the important thing was this 5-minute opposing bar. So in trends, opposing bars should support the uptrend in this case. It should pull back to this level and then it should proceed further to the upside. If you go to a 50-minute chart, the picture is a little bit cleaner. But price start here, it start here. But this is the actual point I'm looking for. Why do I look for this point? Because it is the equity open and the daily open, right? It's an important inflection point for me to see in the market. For price to go there, it took roughly 90 minutes, right? But you have to be able to wait until price is actually going there. Of course, you can take a long scalp into this direction, blah, 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 blah. The thing is to wait and not to do anything stupid in between. And then when you are in the trade, and this is also a huge problem I see nowadays, is that people try to be too precise, too perfectionist. I don't know if this is the right word in English, right? So for me, the bottom line is, which I learned from Linda Rushke, I never forgot, I did 3 workshops with her, but one of the most important things that stood out to me was get the main idea right. And the main idea is a certain point within your framework. I'm going to show you another trade I took. So for me, which also comes back to market beliefs. So we're going a little bit back and forth now. So it is obviously important to evaluate your market beliefs. What do you think the market is doing? Okay, it's a simple question. I'm going to show you a chart that has some price action on it, or even an indicator, right? I'm a huge proponent of everything works, and when you make it work. So I'm not saying this is the right approach. Everything has to suit you in your trading, okay? So one of my trading approaches is when you have a huge wick in the market, you can also look at back. This is treated like some sort of gap, okay? meaning price is going to fill the void of this wick. And I think if you put a volume chart on it, there will be some low volume cluster, whatever it is. So when price is going there, the better case would be taking the buy side out for a tick, but it necessarily doesn't have to do that. Okay. So when it's going there, I'm going to look for a short entry in the market, right? So when is the short entry going to be represented? Like I stated before, I want to see an opposing candle. So with an uptrend of green candles, I want to see this candle getting broken to the downside. It is also interesting that when you have a series of up or down candles, in this case up candles, around the equity open, the momentum, if price is displacing above this, so you have a down candle, price is pushing above, there's usually a follow through in the market, right? The context in this situation is it filled this wick gap, whatever you want to call it. Okay. Then price is breaking below it, this opening order block, on how I call it, this opening opposing candle. So here you have your short entry.
Okay, so you've got your signal, you've got your confirmation, and then you've got your entry. Is that right?
Exactly. So I'm going short here. Everyone I mentor or teach, I'm saying you go short here, right? Because the structure is
not as well. Just for confirmation.
Yeah, I think so. Yeah. I mean, it is a lot of experience. So while I short here, this is the technical correct entry to the market, right? And then you let it ride. You don't let it ride, whatever you want to call it. So the structure or the thing you are looking for, or I'm looking for, has to be defined as possible. So I have a toolbox of trades and setups that I rely on that showed up over the years, that repeat over and over again. And it's really important to have those kind of things to make trading work.
It sure does. So you're primarily a price action trader. You're not using indicators or many technical analysis tools.
So I'm pretty good at reading the price action, but I'm also a huge believer that the price will. So if I have an indicator system, a stop and reverse system, for example. So if you have a stop and reverse system, super trend or PSAR, it's based off linear regression lines and PSAR. The PSAR in this case has been attached to the linear regression line and not to the price. Why? Because the linear regression line is smoothing out the price, meaning, just as a little side note, the PSAR would flip way more often if you attach it to price. When you do it with a linear regression line, which smoothens out price, it is much more likely to follow through if you use it as an entry and exit signal. Okay. Now, the short occurs up here where the PSAR is flipping to the short side, right? Here, so you have those boundaries here. But if I can read price action or understand how the price behaves, I know more or less that it will turn around here. So whatever I have here, a super trend, I don't know, moving average, Bollinger Band, you will have a spike and you will have a system. So if you have any stop and reverse system, let's go to a place where it doesn't work. So here, if I would sell you this system and telling you, Jason, every time the PSAR is going to the long side, you take a long. Every time it's going to the short side, you're going short. It wouldn't work out because in my market beliefs, those kind of things only work or work better with certain levels in the market.
Sure. I agree with you.
Well, then everything comes back to price action, for me at least, right?
For sure.
So you can give me any system you want. I don't care. The level is the level. And most likely, I will get a reaction at the level that I'm marking out. Okay? It's the same with, so I'm also using the initial balance of the week, which is Monday and Tuesday combined. So Monday and Tuesday form for me the initial balance. Okay, so Monday is the opening range. So I'm taking this whole concept of the opening range and putting it to higher time frames. Okay.
Okay, so
Monday
you're
is the
taking that
opening range.
as on a weekly basis instead of on a daily basis.
Yes, exactly. All right, I'm looking at the 1 hour chart, and you will see that if you're going to backtest it, that Monday and Tuesday combined form the high or the low of the week in 80% of the time, right? Or they act as a good as
Sorry, say that again.
Monday and Tuesday combined.
Okay,
So
that's
this
interesting.
initial balance.
I'm learning something
And
here.
when you look, simply go through your chart and look how often are the Monday, Tuesdays, or the initial balance boundaries touched, and what is the reaction out of it? If you can take one trade a week where price is moving back inside of the range, so I'm also, so you have Monday, Tuesday, peak out on Wednesday, moving back into the range to the equilibrium, so the 50% threshold. This trade, in theory, if you can do it, it's totally enough to make a living.
Sure.
Right? By the way, it happened here again. So it pushed out of the initial balance, pushed to the lower boundary. Well, here there was a gap fill. Right? So things like that have structure. Here, when you look at this, so this is the initial balance. You have the wick here, but the closing prices are touched. If you take this entry on a Thursday, going long, you're good to go. It's going to the equilibrium. So here,
brilliant.
Again, Monday, Tuesday, equilibrium, short. Stuff like that. That is pretty simple. Monday, Tuesday, equilibrium, short.
So simple.
It's so simple. Monday, Tuesday, well, questionable if you take those trades, but it's pushing out as soon as price. I mean, you have to understand those kind of concepts, right? Do you want to talk about it? Well, is it interesting?
I'm fascinated. You're teaching me something. I thought I knew it all after 38 years, but I clearly don't.
It is really interesting that most people on social media don't know how to trade a range. So let's say this is a trading range, right? So we have 2 data points on each side, which defines a trade. Okay. So you have obviously the range fake out. Let me mark this one out. We trade towards the midpoint of the range, because often when you have the midpoint of the range, which is the equilibrium, the 50% threshold, you have some sort of reaction of it. So it often bounces off. You make this a different color maybe. It bounces off, maybe proceeds further to the upside. But when you have a push higher out of the range, and it's going through the midpoint of the range, and it's retesting this equilibrium, it most likely go to the other opposite of the range, right? And also falling through. So if you understand this concept,
that's a breakout signal.
It is a great trading signal. You just have to wait for it. It can be also, like I mentioned, a signal day where you look for patterns in the market where this occurs, and then you take the trade because it's a high probability outcome.
This is a breakout signal in effect. You get the upside fake, back through the equilibrium, retest the equilibrium, and then you're likely to get a break to the downside because it sucked all the long positions in, isn't it? Thing.
Exactly. So often when you have a range like this here, and you have some higher time frame levels here, so this happens also in every time frame. You have price hovering around this range, blah, 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 blah. And at one point, whatever it might be, you have a quick spike, and then price is simply reversing to the downside. If it's MG liquidity or whatever this ICT fella is telling you, I don't know.
Yeah, all the new terminology, which I don't understand. But, it's just a fake to suck the longs in and then crush them on a
I know what you mean. The funny thing is, while we're talking about him, I never watched any single ICT trading video, but 2 or 3 years ago, while I was explaining my trading approach, someone was telling me, hey, you're trading ICT. I never watched a single video. So those principles have been around way.
I didn't know about ICT until last year. And I'm thinking, really, okay, I've got to understand this. And I'm like, well, hang on, this is exactly what I do. All he's done is put labels on it, which is brilliant.
Exactly.
And I should have thought of it myself. but he's just labeled the price action and then called it a new system. It's terrific.
That is funny that you say this, because I'm having exactly the same opinion. Because when I was setting up the course for the Discord, and I was saying, okay, this is an ICT class, not in order to lower the value I'm providing, but just to make it. So when I'm telling you, hey, Jason, this is a fair value gap, this is a liquidity run, you know exactly what I'm talking about.
I know. I still don't understand what those terms are. People have subscribed to me and said, oh, yeah, ICT, this is fair value gap, and this is liquidity grab, and this is a order block. And I'm like, well, I've never heard these terms, and what the hell are they? And then I started looking into it. I'm like, I'm a support and resistance trader. I've been doing this for 25 years, but he's just put labels on it. Anyway, brilliant. It's a great marketing strategy. Put some labels on it, and as we said earlier, it makes it easier to identify and understand if you put a label on it. So if it's a tool that helps people, I'm all for it.
Yeah, I totally agree.
But it's not a new concept.
No, definitely.
It's just price action.
Absolutely correct.
Fascinating. Right, now listen, before we run out of time, talk to me about peaktraders.com, where you basically teach what you've learned.
Sure. Yes. So I set up a course with some friends of mine, which is basically Price Action 101. It's based on ICT concepts, so fair value gaps, order blocks, stuff like that, which should provide a solid foundation in terms of trading. I also provided some tools to guide traders along the way, meaning set up a workflow, set up a daily schedule for your trades. So I also always advise people to set up a daily schedule. When are you able to trade? Because this alone helps people to avoid FOMO to a certain degree, right? So what is your schedule when you are in front of the desk? When can you trade? When is a red box when you can't trade? Right? This is really important. People never think about it. They're on their phone, they're on the screen the whole time, but they are actually not really fully committed to it. And then I think the real benefit in the Peak Traders program is having me doing the webinars, to be honest, and providing my daily analysis, right? I don't want to lower the course that I've done, but it's really easy to set up a course. Let's be honest here, right? You take principles, you put them into a video course, and that's it. But the value is me providing insights on how I trade, the structure, and we do some additional webinars on how this whole trading game works. I don't set any false expectations. I mean, it takes a long time. You have to be good at it, have to be sound. And there's also like one of the reasons or one of the main issues with traders or new traders, traders is what is their whole relationship with money? Why are they trading? What is their why? Yeah.
Sure.
I mean, there's we could do another 1 hour of the whole greed and FOMO thing, right?
Yeah.
So what is triggering you in entering trades? What is the outcome? Why are you doing it? I mean, you have to evaluate those things in order to make it work. And this is what you do.
That's an important point, because I say to people, look, you're gambling. You don't have a strategy. You don't really know what you're doing. Now, if you're gambling and if you're doing this for entertainment, that's fine. There is nothing wrong with that. But don't fool yourself into believing you're a trader. You're just having some fun. You're punting around. You've got no idea what you're really doing. If at the end of the week you've made a few $100s, terrific. It's like going to the race course or the casino. But don't pretend you're a professional trader. Just be honest with yourself.
Yeah, absolutely agree. Totally agree with that.
Don't think you're going to make a career out of this because you've had a good run. You won't. That's the most important point. Don't give up the job.
I mean, it's good as so. I always recommend people to have this as a side income and see where it leads to. But so in the end, if you set up, have you heard of Darwinex? Do you know this? I think so.
Of course, yeah. Mm-hmm.
Yeah. If you set up a Darwin and you have a track record of 3 years and it's outperforming the S&P 500 and it's having a lower drawdown. So the average drawdown is 12%, 13%. The average markup is, I think, 15%. If you're outperforming this within a year, So you only need 2% a month, which is 24% a year. And you're having a lower drawdown than 10%. People will throw money at you at some point. It won't happen overnight.
I love that.
It is. Forget about those unrealistic numbers. What I'm doing in the market is not comparable. It is not comparable because I'm super clever, just because I'm doing it since 15, 20 years. You can't compare with me. It doesn't make any sense, right? But if you do 20% on an annual basis, lower drawdown than 10%, because you're keeping your position size low, you stay out of the market, you only take high probability trades, blah, 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 blah. Not tomorrow, but in 3 years, someone will come to you and will say, hey, you have 5 millions, you get 5%, 10% performance fee. Then you do this for 2 years, if you can do it. It's also a question if you can do it. And then after year 7, I don't know if I got those years right, someone else will come and will say, hey, here are 20 millions, do this shit again. It's all about assets under management and keeping the risk small.
But the problem is, no one wants to get rich slowly, as Warren Buffett says. Everyone
Exactly.
wants to get rich quick, and they think trading is get rich quick. And, you understand, well, you told me it took you 7 years to get consistently profitable. That's realistic. And then from there, yeah, you can make money, but it could take you another 7 years to make some serious money. I mean, that's 14 years. That is realistic. As I say to people come to me and say, oh, I want to start trading. What's a realistic return? Can I make 10% a week? And I'm like, or even 5% a week. I'm like, come on, be serious. Who makes 20% in a month in anything? Not consistently. We can all have 20% months, but you're not going to do it month in, month out. I say if you make 1 to 1.5% a week, if you can make 4 to 6% a month, you compound that and annualize it, you are making a huge sum of money. Colossal. It's baby steps. Managing expectations is so important. I've been training a guy who's now become really successful, but wow, he had a phenomenal strategy, and I knew he could be successful, but his mind was all over the place. He said, I want to turn 10 grand into 40 grand in the next 6 months or something. But the problem is, when you say that, you're going for the 40 grand every day. You're not going for the 40 grand in baby steps. And I said, listen, you've got to break it down. Get to 13 grand at the end of this month. Get to, 18 and then 25, and then you will get 40. But that 40 number in your head is you're not trying to do that in 6 months. You're trying to do that this month. You have to forget about the 40 and go for the 12 or 13 first. Anyway.
I mean, it's an immediate shift from process-oriented to money-oriented, which totally messes up your whole trading. It won't work. It simply won't work.
Exactly. And now he's got now he's building the process, and he's doing incredibly well. In fact, yesterday he had a losing day, and he said, "Doesn't bother me. I get it. I know why I lost, and I'm ready to move forward the next day." Instead of before, when he was like, "Oh God, I've had a losing day. I don't think I'm going to trade tomorrow." It's so fun watching the process work.
Absolutely, totally agree.
Constantin, before we wrap it up, tell everyone how can they reach you to learn. Well, you really do have a fantastic knowledge, and I think it's important for people to learn from you. So peaktraders.com.
Peaktraders.com is the mentorship we provide in our Discord, or I provide in my Discord. If you are interested in a more detailed approach, you can go to my homepage, which is constantinpabst.com, where you can apply for a one-on-one mentorship or a group mentorship if you have a friend who wants to learn. So I also offer a one-on-one or group mentorship, which is going on for 3 months, where we discuss trading in a more detailed approach. You can also connect with me on Twitter, which is Trade Berlin, @TradeBerlin, and on LinkedIn, which is linkedin.com/Constantin Yeah, this is the best way to connect with me.
Okay, terrific. And I know that you're going to launch a special coupon for this podcast for our viewers.
Yes. So we set up a coupon code for this podcast, which is 30% off the yearly subscription and 25% off the monthly subscription. So if you just want to get a sneak peek in the Discord and on what I'm doing, please feel free to do so. And the link and the coupon code is in the description.
Yep. Terrific. Well, I've really enjoyed it. I think you can tell. I've even learned something from you, so I'm very grateful. It's been a truly valuable conversation. Your approach to trading through discipline, simplicity, and structure offers a refreshing perspective. For anyone watching who's tired of chasing shiny objects and ready to take their trading seriously, make sure you check out Constantin's work at peaktraders.com. You can also follow him on X, as he said, LinkedIn and Discord. We'll share the links in the description. Whether you're a new trader stuck in the break-even grind or even a seasoned trader needing structure, you'll find a ton of value from his resources and mentoring. I'm sure you've learned a lot from him today. Thanks for tuning in. Wishing you all great success and steady hands in the markets. Don't forget to subscribe to The Trading Battle on YouTube, Spotify, and wherever you get your podcasts. We're bringing you these behind-the-scenes look at top traders every single week. Until next time, this is Jason Sen for The Trading Battle.